Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about another lender. This is the second lender that I've come across now that's doing 100% mortgage, meaning no deposit. I'm going to talk about who this is. I've never heard of them. Maybe you've never heard of them as well. And what this means for the property market. I'm going to be quite insightful on this and tell you whether I would take this kind of deal or if I'd allow one of my two daughters to take one of these types of deal, because I know there's a lot of controversy around deals like this, and you might be thinking, that sounds great, or no, that's definitely not for me. Now, if you're new around here and you haven't done already, do make sure you subscribe over there and hit the bell notification. We've had thousands of new subscribers this month. In fact, the channel is having the most views ever in a month. So thank you to everyone that's been watching. And let's get some more views on this video by smashing like, tickling like, doing something to the like button. That really helps with the YouTube algorithm. And that's why the channel's grown. So thanks to everyone that does that. So 100% mortgages. Now, this sounds like 2008 all over again. If you were around in 2008 or you were paying attention to property at that time, it was crazy what you could get. I, at the time, had some buy-to-let mortgages, and they were on something called a self-cert basis, and that meant self-certification. So I recall you would go to your broker, and they would ask you how much you earned, and if they needed it more to get the application done, that number would get adjusted upwards, and it wasn't really that great. And a lot of people did that. A lot of people said that they could borrow more than they could afford, and ultimately they ended up losing their properties. There were property mortgages at the time where you could get 110% of the value of the property. So you buy a property for 100 grand back then, but they would lend you 110. Now, 100 of it might be as a mortgage and 10% as a loan. But what people would do with that money was often buy cars, or they would go on expensive holidays and stuff like that. And then they had this huge debt that they would have to pay back. And that led to the property crisis. It started in America, but then it came over here. And that led to the credit crunch ultimately. So when people see headlines like 100% mortgages, if they were burnt at that time or they just remember what happened, they're rightfully a bit suspicious about what they are. Now, last week we talked about a lender called April Mortgages. They've got a 100% mortgage that you might want to go and check out if you're looking for that kind of thing. They also have a mortgage where you can borrow 7 times your salary, which is allowing people to borrow significantly more than they could have previously. And a lot of this has come down to the fact that the government has asked lenders to be less strict in their criteria. This week, I've done a video on Barclays Bank, who are making it that the stress tests that you've got to follow aren't that strong anymore. Previously, they would check that you could afford your mortgage if the rate went up 2 to 3%. Now they're only stress testing you for 0.75%. So if you've got a 4% mortgage with them, they're only testing, could you afford that at 4.75? Whereas before, they were testing whether you would be able to afford it at 7%. So that means more people will be approved for mortgages through them. So who's this lender? They're called Gable Mortgages. Let me know in the comments if you've ever heard of them. I have not, but that's also fine. So some people only like to borrow from the big 6, Halifax, Barclays, NatWest, those types of people. But sometimes I've had sticky situations. For example, I had a property down the road that had a short lease that I'd purchased, and then you don't get many options in that scenario. I was able, I needed to get it on a mortgage, and then I needed to extend the lease, which I ultimately did. And the lender at the time, I can't even remember what their name was, but I'd never heard of them. It doesn't matter to me because they're the one lending me money. They're the ones that have got the risk. Ultimately, my solicitor will check all the clauses in the mortgage and make sure everything's hunky-dory that way and there's nothing untoward in there, which there wasn't. But so having a lender that you haven't heard of isn't necessarily a problem. Now, these guys will lend you 100%. What they're saying in their press release is this is for generation rent. There are so many people that pay their rent every single month, and their rent can be considerably more than the mortgage payments would be for them, but they still can't get approved for a mortgage, even if they've got a deposit sometimes. And that's crazy to me. So my daughters, I've got 2 daughters. I've got Amelie, who's 4, who clearly isn't going to be moving out anytime soon. But I've got an older daughter called Georgia. And if she wanted to do this kind of deal, I'd consider it for her, because at the end of the day, I really wouldn't want her renting. And this gives her the opportunity to create some equity over time. So she could buy a property. I would make sure she bought a property she could add value to. That would create some equity. But also just her monthly payments would be creating a little bit of equity over time. And as the market goes up as well, she'd create some more equity. At that point, she could then change on a refinance, on a remortgage to a different lender, one of the high street lenders that more people like to work with. And that would be fine with me. So what are these guys saying? So they are saying that they will lend you 4.49 times your salary if you're a normal person. Most of us hopefully are normal, I don't know. But 4.5 times your salary, 4.49. I don't know why they don't make it 4.5. But if you are a key worker, so this is quite smart of them as well, because key workers have more predictable income and more stable jobs. You're less likely to be made redundant. So for key workers, they will lend 5.5 times the salary. So a little bit more. So if you're a policeman, fireman, nurse, doctor, whatever, that is a good option for you guys. So that's something to look out for. So what's the rate? Because there's going to be a bit of a downside here, but it's not too bad. The rate on this is 5.95%, which isn't the worst rate there, but it's not the best. You can get some just below 4% now, but not with 100% or a small deposit. The best rates that you're seeing are when you've got a 40% deposit or 40% equity, which these people wouldn't have. So I think this is an option. I would consider it if I was starting out and I wanted to get on the property ladder and I was terrible at saving for a deposit, but I was paying my rent every single month. Would I look at this? 100% I would. I'd rather have this mortgage at 5.95%, paying something towards my property and creating me some equity, and time is going to create equity, and I would buy somewhere where you can add value. I'd be happy with this deal, and I think that this is a good option to get some people that couldn't get on the property ladder. They don't have people that can give them deposits, or they can't save one. I think this is a good option. What do you think about Gable mortgages? Have you ever heard of them? I have never heard of them until I made this video. Do comment below, even if it's just to say hi. Make sure you subscribe, guys. Let's get 43,000 subscribers, and check out all the other content as well on the channel, including this video right here.